To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello everyone. So today we are going to discuss the revision test paper of CA Foundation Paper 2 Business Laws. So let's start with the RTP. So if you look at the first question, let's start with the first question. Mr. Y is a devotee and wants to donate an elephant to temple as core part of a ritual. He contacted Mr. X, who wanted to sell his elephant. Mr. X contracted with Mr. Y to sell elephant for 20 lakhs. So here there's a contract which has been entered into between Mr. X and Y, wherein Mr. X has agreed to sell his elephant to Mr. Y. However, both were unaware that the elephant was dead a day before the agreement. So the subject matter of the contract, which is elephant, it was dead a day before the agreement was made between X and Y. So in this situation, explain whether the contract is void, voidable, or valid. So now here you have to analyze and say whether the contract, decide whether the contract is void, voidable, or valid. So now here the essential element of contract, which is the subject matter, which is the elephant here in the situation, is not in existence. And both the parties are mistaken about the existence of the subject matter of the contract. So in this situation, the contract is definitely a void contract. It is not possible to perform at all because the elephant is not in existence. And since the elephant is not in existence, how is X going to sell elephant to Y? And these type of questions, these type of examples we have gone through in your study material as well, where there's an agreement to sell the horse and the horse has died. Both the parties are unaware of the fact that the horse is not in existence anymore. So this is based on similar lines. It's just that elephant has replaced horse here. So a very simple and a very easy question. Moving on to the next question. So in light of provisions of the Indian Contract Act, answer the following. A student was induced by his teacher to sell his brand new bike to the latter at a price less than the purchase price to secure more marks in examination. Now, as soon as I've read this line, I'm sure most of you would have even answered the question till now. This is a case of undue influence. And we have a similar example in our study material as well, wherein a student was induced to sell a car, brand new car, in order to secure more marks in examination. So accordingly, the bike was sold. However, the father of the student persuaded him to sue teacher, whether the student can sue it, and if yes, on what grounds. So the grounds here are on the basis of undue influence. There was undue influence. The teacher is in a dominant position. And yes, the student can definitely avoid the contract. The contract is voidable in nature. The next is a direct question. Give the circumstances as to when vindictive or exemplary damages may be awarded for breach of contract. So all of you know this very well, that there are only two situations wherein these type of damages can be claimed. One is breach of promise to marry. And the second is wrongful dishonor of check. So these are the situations when vindictive or exemplary damages can be claimed. Let's move on to the next question. Karan agreed to purchase wooden table for his study room from Mr. X. So Karan, he has agreed to purchase a wooden table for his study room from Mr. X. Table was in good condition and was examined by Karan before purchasing. So the table was in a good condition and Karan also examined the table before he purchased it. He found no defects in it and paid 20,000 for that table. Now, upon examination, Karan does not find any defect in the table and he pays 20,000 for the table. Later on, it was found that one leg of the table is broken. But later on, he finds out that one leg of the table is broken and Mr. X has pasted the wood and tried to hide the defects in the table. So Mr. X, what he did was he pasted the broken leg and he tried to hide the defect in the table. Can Karan return the table and claim the amount back, discuss the same with reference to the Indian Contract Act 1872. So here this is a case wherein Karan, though he examined the table, he was not able to find the defect. But the reason why he was not able to find the defect was the defect was actively concealed by Mr. X. So this is a case of active concealment of defect. And there's an intentional concealment of defect which has been done by Mr. X here in this situation. So in this case, Karan can resign the contract. So let's now have a look at the answer to this particular question. So as per section 17, which talks of fraud, a false representation of material facts when made intentionally to deceive the other party to induce him to enter into a contract is termed as fraud. It also states about active concealment. So where a party intentionally conceals or hides some material facts from the other party and make sure that the other party is not able to know the truth, in fact makes the other party believe something which is false, then a fraud is committed. So when fraud is committed, the party gets a right, the aggrieved party gets a right to resign the contract. And in the present case, Karan has examined the study table before purchasing it, but he could not find any defect because it was concealed by Mr. X. So as we've discussed, there was an intentional concealment which was done by Mr. X. So in this situation, Karan can resign the contract and claim compensation for the loss suffered due to the fraud which was done by Mr. X. So in this situation, Karan can definitely resign the contract and also claim compensation from Mr. X. So again, a very simple and a very easy question. Let's move on to the next question. What will be the rights of the promisor in the following cases? Explain with reason. So these are all cases which have been taken from examples which are given in our study material. So let's quickly run through this. This is a very simple and a very easy question. So the first case is Mr. X promised to bring back Mr. Y to life again. Now, do you think this is possible? Is this agreement even valid? No, it is void. It is not, there's no possibility of performance in this case. Second situation is A agreed to sell 50 kgs of apple to B. The loaded truck left for delivery on 15th March, but due to riots in between, reached A on 19th March. So here it could be a situation. Now this is a perishable food. Apples are perishable in nature. So here we can use the provision of destruction of subject matter. The next case is an artist promised to paint on the fixed date for a fixed amount of remuneration, but met with an accident and lost both his hands. So now this is a case wherein personal, it is something which requires a person's personal skill, personal talent. And since the artist has lost both his hands, it is no longer possible to complete the painting. So again, here, this is a contract of personal nature. So we'll use the provisions with regard to contract of personal nature to answer this particular question. A very simple one. These type of examples are already a part of examples which we have discussed when we were doing the course. Moving on to the next one. Abhishek entered into contract of import of toys from China, but due to disturbance in relation of both the countries, the imports from China were banned. So here, this is a situation wherein subsequently the relationship between both the countries turned sour. The countries now have become alien enemies. So here in this situation, again, there's subsequent impossibility, subsequent illegality, because of which the contract cannot be performed. So again, a very simple question. What we have seen in all the 4 questions which we discussed, all the questions are easy, provided that you know all the provisions well. moving on to the next one. So this is a direct question. So we'll just go through what the question is and then move on to the next question. So though a minor is not competent to contract, nothing in the Contract Act prevents him from making other party bound to the minor discuss. So here you have got a statement, and on the basis of statement, you have to just elaborate and give the answer to this particular statement. So not a lot to discuss on this particular thing. So let's move on to the next question. C bought a bun from a baker's shop. The piece of bun contained a stone in it, which broke C's tooth while eating. So C bought a bun. However, this bun, it contained a stone in it, and when C was eating the bun, C broke his tooth. What are the rights available to the buyer against the seller under the Sale of Goods Act 1930? So in this situation, when we talk about goods being sold, there's a condition, and that is condition as to wholesomeness. The goods which are being sold by the seller shall be wholesome, meaning that when it is with respect to edibles, when edible eatables are being sold, the seller has to make sure that they are in a good condition, they are in a wholesome condition, and they will not harm the person, they will not harm the buyer. However, in this situation, C bought a bun, however, there was a stone in it, which means this condition as to wholesomeness has been breached. And we know that in case of breach of condition, the party gets a right to rescind the contract and also claim damages from the other party, that is the seller. The buyer gets a right to claim damages from the seller as well. Moving on to the next part. A contract with B to buy 50 chairs of certain quality. B delivers 25 chairs of the type agreed upon and 25 chairs of some other type. So the contract is with respect to 50 chairs, out of which B has delivered 25 chairs of the same type which has been agreed upon. However, the remaining 25 chairs are of a different quality. Under the circumstances, what are the rights which A has against B under the Sale of Goods Act? Now, in this situation, what can A do? So when a seller, he sends goods of mixed variety, in that situation, the buyer can either accept the goods, or he can accept the goods which are as per description and reject the remaining goods, or A also has a right here to reject the entire 50 chairs. So let's have a look at the answer to this question. So when delivery by description is happening, when the seller delivers to the buyer the goods he contracted to sell mixed with goods of a different description, which is not included in the contract, the buyer may accept the goods which are in accordance with the contract and reject the rest, or may reject the whole. So he can accept 25 chairs, reject the remaining 25 chairs, or he can reject the entire lot of 50 chairs. So he may accept 25 chairs of the type agreed upon and may reject the other 25 chairs not agreed upon, or may reject all the 50 chairs. So A can reject all the 50 chairs as well. Let's move on to the next question. So Ankit needs a black pen for his exams. So just like all of you all need a black pen, Ankit also needs a black pen for his exam. He went to a nearby stationery shop and told the seller for a black pen. Seller gives him a pen saying that it is a black pen, but it was clearly mentioned on the packet of the pen that blue ink pen. So Ankit asks for a black pen from the seller, but the seller, he gives a packet of blue ink pen stating that this is a black pen to Ankit, and Ankit, he also takes it. Ankit ignores that and takes the pen. So he does not look at the packet which clearly states blue ink pen, and he takes the pen from the seller. After reaching his house, Ankit finds the pen is actually a blue pen. Now Ankit wants to return the pen with the words that seller has violated the implied condition of sale by description. whether Ankit can do so as per the sale of goods act. So here what has happened, Ankit, he wanted a black pen. He went to the stationery. He asked the seller to give a black pen. However, the seller, he gives a packet of blue pens stating that this is black pen. Ankit ignores it and takes the pen. After coming home, he realizes that this is actually a blue pen and now he wants to return the pen, stating that the seller has violated the implied condition of sale by description. So whenever sale by description is happening, the good should correspond with the description. However, here in this situation, though it is a case of sale by description, but if Ankit would have used ordinary diligence, if Ankit would have been a little more careful, he would have easily come to know that this is not a packet of black pen, but rather it is a packet of blue pen. And it was clearly stated on the packet of pen. So here in the situation, Ankit cannot resort to implied condition of sale by description. Rather, what will apply here is the doctrine of caveat emptor. It is the buyer's responsibility to make sure that the goods which he is purchasing are of good quality or are as per the description. It is not only the seller's responsibility, but it is also the buyer's responsibility to be aware. So here in the situation, applying the doctrine of caveat emptor, Ankit cannot return the pen. He cannot apply the implied condition of sale by description. Rather, the doctrine of caveat emptor will be applicable here, and Ankit is not in a position to return the pen. So let's have a look at this answer. So whether goods are bought by description from seller who deals in goods of that description, there's an implied condition that the goods shall correspond with that quality. But whether buyer could find the defect by ordinary examination, this rule shall not apply and the doctrine of caveat emptor will apply. Now in this situation, Ankit, he orders a black pen, seller gives him a pen stating it is black, but however it is blue. Now Ankit wants to return. So here, it is a case of sale by description. However, Ankit can find the defect using his ordinary diligence, as blue ink pen has been clearly mentioned on the packet of the pen, and hence applying the rule of caveat emptor, Ankit cannot return the pen. So again, a very simple question. So if you look at all the questions which we have done till now, all the questions are very simple, based on some examples, based on some case studies, which you will understand only when you are very clear, conceptually clear with the provisions. Let's move on to the next question. Akansh purchased a television set from Jethalal, the owner of Gada Electronics, on the condition that the first 3 days he will check its quality, and if satisfied, he will pay for that. Otherwise, he'll return the television set. So this is a case of goods sold on approval or return basis. This is sale on return basis. On the second day, the television set was spoiled due to an earthquake. Now, how many days did Akansh want? He wanted 3 days. However, on the second day itself, there was an earthquake which spoiled the television. Jethalal demanded the price of television set from Akansh. Whether Akansh is liable to pay the price and who will bear the ultimate loss. Now, when we talk of goods sent on approval or return basis, the property passes to the buyer if he signifies his approval, if he gives his approval, or the time has expired and the buyer, he has not communicated about his acceptance or rejection, or whether buyer does an act which is indication that he has adopted the transaction. So in that situation, the property will pass. However, here in this case, the time has not lapsed. It is only the second day where the earthquake has happened, and the time which Akansh had was 3 days. So in this situation, Akansh has neither given his approval, nor the time has lapsed. Neither Akansh has done any act which gives an indication that he has adopted the transaction. So in this situation, the property in goods has not passed. Property, that is ownership in the goods, has not passed to Akansh, which means here the person who will have to bear the loss is the seller. So Mr. Jethalal is the one who will have to bear the loss and not Akansh. Let's move on to the next question. When can an unpaid seller of goods exercise his right of lien over the goods under Sale of Goods Act? Can he exercise right of lien if property in goods has passed to the buyer? When such a right is terminated, can he exercise right even after he has obtained a decree for the price of goods from the court? So here, this is all about right of lien. This is a simple, straightforward theory question. So we'll not discuss a lot on this. All you have to write about is what is the unpaid seller's right of lien, in which situation can an unpaid seller exercise his right of lien, when is the right of lien terminated, when does the right of lien comes to an end, and also can this right be exercised by the seller if he has obtained a decree for the price of goods from the court. So this is a simple theory question. This is a direct question. So doesn't require a lot of explanation. This is something which we have understood in a lot of detail already. So let's move on to other case study based questions. Mohan, Sohan, and Rohan are partners in the firm Messrs. Mosoro and Company. So Mohan, Sohan, and Rohan, they are partners in Messrs. Mosoro and Company. They admitted Bohan as nominal partner. Nominal partner means a partner for namesake and on agreement between all the partners. Bohan is not entitled to share profit in the firm. He's a nominal partner and he's not entitled to share any profit in the firm. After some time, a creditor, Karan, filed a suit to Bohan for recovery of his debt. Bohan denied for the same, as he is just a nominal partner and not liable for the debts of the firm, and Karan should claim his dues from the other partners. Now, taking into account the provisions of Indian Partnership Act 1932, whether Bohan is liable for the dues of Karan against the firm. So here in the situation, a nominal partner has been admitted to the partnership, and a nominal partner, though he is not entitled to any share in profit here, but he is liable to the third parties for all the acts of the firm. So here in the situation, Bohan is definitely liable. Though he is a nominal partner, though he has only lent his name to the firm, but Bohan is definitely liable here in this situation, and Karan can definitely file a suit against Bohan as well. In case Karan has filed the suit against firm, whether Bohan would be liable? So the answer would still remain same. Even if Karan has filed a suit against firm, the Bohan would still be liable. Let's have a look at the answer. So nominal partner is a partner only in name. The person's name is used as a part, though his name is used as a partner in the firm, though he's not actually a partner, he's not entitled to share in profits, but is liable for all the acts of the firm as if he was a real partner. So a nominal partner must give public notice of his retirement, and his insanity is not a ground for dissolving the firm. So in this situation, Bohan was admitted as nominal partner. Creditor Mr. Karan, he has claimed his dues from Bohan as he is a partner in the firm. Bohan has denied for the claim by replying that he is merely a nominal partner. However, Bohan, though he is not entitled to share of profits of the firm, he is liable for all the acts of the firm as if he were a real partner. Therefore, he is liable to Karan like all the other partners. And in case Karan files a suit against the firm, in that situation as well, the answer would still remain same. Bohan is liable even then. So though he is a nominal partner, not entitled to share profits, but he is still liable for all the acts of the firm to third parties. Let's move on to the next question. A, B, and C are partners in Messrs. ABC and Company. The firm has decided to purchase a machine from Messrs. LMN and Company. Before A and B purchased the machine, C died. Now, before the machine was purchased, a partner, Mr. C, he dies. The machine was purchased, but thereafter A and B became insolvent and firm was unable to pay for machine. Explain, would the estate of C be liable for the dues of LMN and Company? Now, here in the situation, we are talking of the liability of estate of a deceased partner. Applying the provisions of the Indian Partnership Act, we know that the estate of deceased partner would not be liable for any of the acts which are done after his death. So in this situation as well, Mr. C's estate would not be liable for the dues of Messrs. LMN and Company. Here in the situation, the estate of Mr. C who has died is not liable for the dues of LMN and Company. Let's move on to the next question. G, I, and S were friends and they decided to form a partnership firm and trade in particular type of chemicals. After 3 years of partnership, a law was passed which banned the trading of such chemicals. So initially, the chemical which they dealt in was legal. It was legal to trade in such chemical. However, after 3 years of partnership, a law was passed that which banned the trading of the chemicals. As per the provisions of Indian Partnership Act 1932, can G, I, and S continue the partnership or will their partnership form get dissolved? Now, this is a case of compulsory dissolution. So there are situations wherein the partnership has to compulsorily dissolve. The reason being here, there is a subsequent law which was passed which makes their business illegal, which has banned trading in such chemicals. So here in the situation, the partnership has to compulsorily dissolve. So this is a case of compulsory dissolution. So they can no longer continue with this partnership firm. The partnership firm will have to compulsorily dissolve. The next question is again a direct question from LLP Act. What is the procedure for maintenance of books of accounts, other records, and audit of LLP? So Section 34 of the LLP Act, which talks about maintenance of books of account and other records, and the other provisions with regard to audit of LLP are to be written here. So this is a direct question wherein you directly have to write about the provisions with regard to maintenance of books of account, other records, and audit of LLP as per Section 34 of the LLP Act 2008. Moving on to the next question. A transport company wanted to obtain license for its vehicle, but could not obtain licenses when applied in its own name. So a company wants to obtain licenses for its vehicle. However, they could not obtain licenses when they applied in their own name. It therefore formed a subsidiary company and the application for a license was made in the name of subsidiary company. Now what they do is, in order to obtain license, they make an application by forming a subsidiary company. The vehicles were to be transferred to the subsidiary company. Will the parent and subsidiary company be treated as separate commercial units? Explain in the light of provisions of the Companies Act 2013. Now, as soon as you look at this particular question, this particular case study, what comes to your mind is lifting of corporate wheel. There's a case law which we had seen on the similar lines, wherein a parent company, holding company could not obtain licenses. So it tried obtaining licenses by forming a subsidiary company. So in that situation, again, the corporate wheel was lifted and it was ascertained that who is the actual person behind it. So in this situation as well, both these companies, the parent and subsidiary, will not be considered, will not be treated as separate commercial units. Corporate wheel will be lifted in this kind of situation. So let's have a look at the answer. This is a case study which is completely based on the case law. So if the subsidiary is formed to act as an agent of the principal company, it may be deemed to have lost its individuality in favor of principal, and the wheel of corporate personality is lifted, and principal will be held liable for the acts of the subsidiary. So the facts of the case are similar to the case of Mercantile Transport Limited versus British Transport Commission, wherein transport company it wanted to obtain licenses on vehicles but could not do so. So when applied in its own name, they formed a subsidiary and made applications in name of the subsidiary. So here the application for licenses was rejected. So in this given case as well, the parent and subsidiary company shall not be treated as separate commercial units. So parent and subsidiary here will again not be treated as separate commercial units. The corporate wheel will be lifted in this case as well. Moving on to the next question. ABC Private Limited has been overstating expenditures in their profit and loss account for the past few years. On inquiry, it was found that the mere purpose was to avoid tax. However, there was no fraudulent intention. Should the corporate wheel of the company be lifted? Kindly justify. Now, we know that there are 5 situations where the corporate wheel of the company is lifted, and one such case is wherein a company doesn't act to avoid any taxes. So, though here the company did not states that it does not have any fraudulent intention, however, the act of overstating expenditure was done in order to avoid taxes. So, in this situation, yes, the corporate wheel of the company will be lifted. So here, what do you have to? How do you write this answer? You first have to mention that what are the situations wherein the corporate wheel of the company will be lifted, and then finally give your conclusion stating that though the company did not have any fraudulent intention, but they did this act of overstating expenditures, overstating expenses in order to avoid taxes, as a result of which the corporate wheel of the company should be lifted in the given situation. Let's move on to the next one. A company registered under Section 8 has been consistently making profits for past 5 years after a major change in management structure. So, Section 8 company, which is a company formed for charitable objectives, has been consistently making profits for past 5 years. Few members contended that they are entitled to receive dividends. Can the company distribute dividend? If yes, what is the maximum percentage of dividend that can be distributed as per the provisions of Companies Act 2013? Also discuss this along with the regular matters. The company kept a general meeting by giving only 14 days notice. Is it valid? So here in the situation, this question is all about a Section 8 company. Now we know that a Section 8 company shall utilize its profits only for the purpose with which it was incorporated, and it cannot distribute dividend. It cannot distribute dividend to its members. It is not allowed. However, sending a notice, 14 days notice for general meeting is allowed. A Section 8 company, instead of 21 clear days, it can send a notice of 14 days in order to call the general meeting of the company. So that is not a problem, that is valid. However, the company cannot distribute any dividends to its members. So let's have a look at the answer. So company under Section 8 is prohibited from paying any dividend to its members. So the contention of members to distribute dividend is wrong. The company is allowed to call general meeting by giving 14 days notice instead of 21 days. So that act of the company is valid. Let's have a look at the last question now. No Limit Private Company is incorporated as unlimited company having share capital of rupees 10 lakhs. So it is a company, it is an unlimited company. Unlimited company means a company where the liability of shareholders is unlimited. One of its creditors, Mr. Samuel, filed a suit against the shareholder, Mr. Innocent, for recovery of his debts against the company. Mr. Innocent has given a plea in the court that he is not liable as he is just a shareholder. Explain whether Mr. Samuel will be successful in recovering his dues from Mr. Innocent. So, though the liability of members in an unlimited company is unlimited, but however, it is only at the time of winding up of the company when the official liquidator calls in for the amount. It is only then when the shareholders they have to pay in the amount which they are liable to pay. So, in the situation, Mr. Samuel he cannot uh, file a suit, or he cannot file a suit only against Mr. Innocent being a particular shareholder of the company. Now, this act of Mr. Samuel is not valid, is not correct. So let's have a look at the answer. So unlimited company is a company when there's no limit on the liability of the members. The liability of members extend to the whole amount of company's debts and liability, but he'll be entitled to claim contribution from the other members. And in case the company has share capital, the AOA must state the amount of share capital and the amount of each share. So the creditors can institute proceedings for winding up of the company for their claims. The official liquidator may call the members for their contribution towards liabilities and debts of the company, which can be unlimited. So in this given case, Mr. Samuel cannot directly claim his dues from against the company from Mr. Innocent, even if it is an unlimited company. Mr. Innocent is liable up to his share capital. His unlimited liability will arise when the official liquidator calls the members for their contribution towards the liabilities and debts of the company at the time of winding up. So though it is an unlimited company, the creditor he cannot directly sue upon the shareholder of the company. When the official liquidator calls for contribution from the members, that's when Mr. Innocent will be liable to pay. So here in this situation, Mr. Samuel directly claiming dues from Mr. Innocent is not correct, is not valid. So this was a new type of questions, a question which was not previously asked for. So this is a little new as compared to the previous ones, but all the questions which we've discussed, all the questions were on an easier side, provided that you are conceptually clear with all the provisions and with all the basics. So with this, we have completed the discussion of the revision test paper for CA Foundation, paper 2, business laws. In case you have any queries or any doubts, you can reach out to us on forums and we will be happy to help all of you. Have a good day. Thank you.